Hey there, it's Mark from Caliber Home Loans. I just want to go through the market from last week and what we're looking at for this coming week. So let's just dive right in and then we'll talk a little bit about some more forbearance information that came out over the last few days. So let's dive right in. So here we have the chart from Friday. So you'll see that this is where we opened as far as bond pricing, and it took an immediate hit. And the reason for this was that the jobs information came out. So unemployment was actually lower than what was expected. And instead of losing, I don't know how many millions of jobs we were expected to lose, we gained 2.5 million. So the initial reaction for the bond market was negative because this is good news for Main Street. As we've discussed, anytime there's good news on Main Street, it's bad news for rates because good news on Main Street is considered inflationary, and that causes bond yields and rates to go up. So you'll see that it took a dip, and then almost immediately it went back up. And this is where the Fed comes in, and they've been buying all these bonds. So they pretty much negated the entire drop at the market open. So you'll see that this is where we opened, and this is where we closed awfully close. I mean, there was a little bit, we closed a hair lower than where we opened, but you know, again, the Fed bond buying helps immensely to keep the market stable. So let's take a look at the past week. And again, you'll see that there still has been this downward trend in the bond pricing. So that creates higher rates. So as bond prices go down, rates go up. And again, you'll see the big dip from Friday morning at the open. So let's take a look at the last month. And you'll see that it's pretty much been it's been fairly volatile. So, you know, it's the Fed has been buying less and less bonds every week. They're trying to pull back and not spend as much money and still keep rates pretty much the same. So rates have gone up a hair. Some are saying that we've hit the bottom. We've bounced off. I'm not completely convinced of that. I think that it's going to depend on the economic news. I think that as we move forward with the country reopening and seeing how many more jobs we're adding, this will certainly impact the bond market. But I think the Fed's going to stay in there and just try to keep things stable because they don't want rates going up. They don't want the housing market to get hit. It's one of the very, very positive sides of the financial markets and the economy, and they have no desire to see that people stop buying houses and stop refinancing and stop doing cash outs and putting themselves in a better position. So that's kind of where we're at with the mortgage-backed securities. I did want to take a look at, just give you an idea what else is going on. The 10-year government bonds closed at 0.89, which is as high as it's been since I think it was March 20th. So again, you know, it's still under 1. It's still extremely low. I mean, if you look at the 6-month trend, you know, we were all the way up here at the beginning of the year. So the 10-year is still pretty low, but it has gone up. And again, this is indicative of what's going on in the economy. Again, when the economy shows improvement, bond yields typically go up. So that's kind of where we're at with that. So let's just talk a little about forbearance information. I did include an attachment into the email that you're free to send out to any clients that are thinking about forbearance, that are in forbearance. Remember that anyone that's in forbearance can't purchase or refinance until they've made 3 full payments in whatever the arrangement is when they come out of forbearance. So they just can't pay off if they're in forbearance, they can't pay off what they owe when they sell the house and move on. They have to be out of forbearance for 3 months and have 3 payments logged in. So just keep that in mind. Self-employed borrowers the requirements have gotten stricter. So remember, typically we look at the last 2 years' tax returns and we take an average. And then we usually get a profit and loss statement that's not audited, that's done from the company owner, the borrower that's a company owner, and we'll get a company bank statements if they exist. So on the conventional side, they've gotten a little tougher. So besides the 2 years tax returns, now we're looking at getting either an audited statement from the CPA if they don't have business returns, or if they've got business bank statements, or if they've got business bank statements, we need the last 2 business bank statements, and they can still do an unaudited profit and loss. And the profit and loss does have to extend through the most recent month. So, for instance, if someone's applying today, I would need a profit and loss through the end of May, whether it's audited or not audited. So this has gotten a little stricter. And then the bank, if we're using bank statements, the deposits in the bank statements have to line up with what the income is that they're saying that they're making. So we're not netting them out. They just, if they're saying they're making $20,000 a month, then we need to see $20,000 a month in deposits. So it's gotten a little stricter. The paperwork side for the borrower has gotten a little bit heavier. We are letting our self-employed borrowers know right up front, hey, you're going to need to do this. I can take a look at what you've got, but you're going to need to do this. So just a heads up. Other than that, MSHDA is cranking. I've got a lot of MSHDA pre-approvals. The jumbo market is starting to come back, although I'm not sure how rates are going to look. We're getting a new pricing on that on Monday. And, again, the for any of those jumbo loans, if the borrower is a vet or qualifies for a VA loan, we can still do zero down VA loans up to, I think our cap is 1.5 million with no mortgage insurance, and that's a great deal. If the borrower qualifies for a VA loan. So keep that in mind. Any questions come up, give me a call, 248-705-8431. Have any clients that need to be pre-approved, have them give me a shout. Have a great day. Talk to you later.